What's going on, everyone? My name is David Smith. I run the Booksmith Bookkeeping, which is a bookkeeping and advisory firm based out of Iowa. And today I want to jump into what I think is the most important financial statement that any business owner should be reviewing on a regular basis, at least quarterly, preferably monthly, if not more, but at the very least should be doing it quarterly. And that's the statement of cash flows. Now, most people are familiar with the profit and loss statement or the income statement and the balance sheet. And those two are really important statements. But what a lot of people don't know of yet is the statement of cash flows. And it's really kind of a combination of the profit and loss and the balance sheet. But it's important because it follows the cash. And cash is king. Cash flow is king. If your business does not have cash, you're going to go under. And so neither of the other two statements tell the full story of what's happening with your cash. And that's where this statement comes in. So it's so important to be reviewing this on a regular basis. So I just want to kind of take a little bit of time to go through what it is, how to understand it, and we'll dig in future videos on some analysis. But the goal of this video is just to show a basic understanding of what the statement of cash flows is. So it covers a period of time, just like the profit and loss statement. I've got this one for all of 2025, and it's really showing what is your cash doing throughout the year for this time period, whatever time period you select on it. I've generated this from QuickBooks for Joe Contractor LLC, and so that he runs a contracting business. And so let's take a look down below. It's split into three sections here. The top one is operating activities. And that is really what's the cash generated from your core business activity. If he's a contractor, let's say he does kitchen remodels. And so this is saying, what are your kitchen remodels generating? Okay, as far as cash goes. The next one is investing activities. This is the second section. And this is looking at cash expenditures on property, plant, equipment, trucks, trailers, that type of thing. That's not going to be hitting your profit and loss statement, but you're still spending the cash. Things to improve your business, improve the infrastructure of your business, stuff like that. And then the third section is financing activities. This has to do with debt, owner's equity. If you have stocks, it would be in here. So that's the third section. So let's jump back up to the top here and just kind of briefly go through line by line what's going on here. So it starts at the top with net income. We can see that right here. Joe Contractor had $100,000 of net income for 2025. And this is pulling directly from the profit and loss statement. But what he doesn't realize is his profit and loss statement is not directly tied to cash. It's not showing the full picture. It's not telling the whole story because he sent some invoices. He sent some invoices that have not been paid yet. And so while the invoices are showing up as net income on his profit and loss, he has not collected all the cash yet. And the goal of this statement is to answer the question, what is my cash doing? Where's my cash going? And so he's not collected $9,500 of invoices. So we're actually going to take $9,500 out of his net income. So $100,000, we're subtracting $9,500 of uncollected invoices. The next line item, we've got prepaid expenses here. And these are expenses that he's actually paid in a previous year, 2024, let's say. He paid a large expense and he wants to expense it out throughout 2025. Let's say it's insurance. He paid $12,000 of insurance in December of 2024, and he wants to expense it in each month of 2025 as he uses it. So the cash left in 2024, we're expensing it in 2025. So it's a non-cash expense throughout 2025. So we actually want to add that back into his net income because he's not actually spending this cash in 2025. Inventory. He is buying inventory. He's spending cash on some inventory items, maybe some lumber, maybe some plumbing supplies, countertops, whatever it is. He's spending cash on the inventory, but inventory is an account on the balance sheet, so it does not affect net income. So, in light of trying to figure out where the cash is going, we're actually going to subtract that inventory amount. We're going to take it out from his net income because he is spending that cash. Depreciation is another big one, and that is for vehicles. It's a non-cash expense. Any kind of vehicles, equipment, if you own property, you can depreciate property, but that's a non-cash expense. He's not expending cash for depreciation, but it's affecting his net income. It's reducing it. So we want to add that back in. We want to add the cash back in because he still has that cash. Accounts payable. This is another one. You enter a bill into QuickBooks, it's going to reduce your net income because it's going to be added as an expense. But if he's not paid that bill yet for $3,000, he still has that cash. So again, we're looking at where's my cash? What's my cash doing? We're adding that back in because he's not spent that cash yet. Credit card, same idea. He's not paid off the credit card yet. He still has the cash. Maybe he's bought a lot of supplies with it, and those are reducing his net income as expenses, but he's not actually paid off the credit card yet. So he still has the cash. Payroll liabilities, same idea. And QuickBooks just recently, probably like a year ago, I think, added this QuickBooks tax holding account. But you've got your payroll liabilities, so let's take a look at all of them. These are liabilities that you've not actually paid yet. Maybe they're due on a monthly basis, maybe they're due on a quarterly basis or annual basis. And you've not actually paid these taxes for payroll yet. QuickBooks recently added this tax holding account where they do actually take the money out of your account. So where before you would still have this cash, the cash for all of these tax liabilities, QuickBooks actually goes ahead and takes that cash out of your account. So when you pull this report specifically from QuickBooks, all the payroll liabilities and this QuickBooks tax holding account should actually zero out. So you're actually spending that cash, and so these should zero out. Net zero, no change. And then customer deposit liability is this last one here. You get deposits on jobs from customers. Those are liabilities since you've not actually done the work yet, and they should be hitting the balance sheet. So they're not affecting your net income. They're not increasing it. It's not counted as income when you get a deposit liability, but you do receive the cash. So we're adding that cash back in. So that's the operating section. So we're looking at a net increase in cash of $11,500. That's adding all these together. That's the net increase in cash for your operating activities. And so adding that to the net income up here, we get $111,500. So that's only the first section though. Then we've got investing activities, things like tools, equipment, trailers, trucks. So this person, Joe Contractor, bought a truck, he bought a trailer, he bought a lot of equipment, he bought some tools. None of these show up on the profit and loss if it's being done correctly. None of them show up on the profit and loss. So they're not affecting the net income, but he's still spending the cash on it. And this is one of the biggest points where people miss, where they don't understand the interplay between the profit and loss and the balance sheet. They see $100,000 as net income and they think I should have $100,000 in my bank account, but they don't realize they bought a truck, they bought a trailer, equipment. So why is the profit and loss showing $100,000, but I don't have that cash in my account? This is why, because these are showing up on a different statement. And that's why this statement in particular is so important. So he spent $51,700 on these pieces of equipment. He spent the cash on them, and so we want to take that out of the total cash balance. And finally, we have financing activities. And this is an LLC. We can go to the top, see this is just an LLC. We're just doing very basics right now. So this is money that he's taken out of the business. So he pays himself, let's say, a few thousand every month, and total $70,000 over the course of 2025. So that's money that he's taken out, paid himself. He's added $8,000 of his own money back into the business. And then let's say he took out a loan for $10,000. So he got the cash. Again, this is not income, it's not an expense. He got cash from a loan. And so we're adding that back into his bank account. So, all in all, provided by financing activities, he's actually out $52,000 of cash because he took $70,000 and only got $18,000 back into his bank account. So then we've got the net cash increase for the period, and this could be an increase or a decrease. Excuse me. So we're basically just totaling total adjustments for operations, total adjustments for investing, and total adjustments for financing. Those three total out to give him a net increase of cash of $7,800. And then at the very bottom, we've got the last two. He started the year with $20,000 in his bank account. Now he's got an increase of $7,800. So he ends 2025 with $27,800 in his bank account. So that's just a general understanding, basic understanding of the statement of cash flows. But super, super important to be reviewing this on a regular basis, because this is where you're going to really figure out what's happening with your cash. And like I said before, cash is king. Keep an eye on your cash, know what it's doing, analyze this statement on a regular basis. We'll jump into more analysis in future videos. If you like this video, please subscribe. If you have any questions, just comment below. Let me know if there's any videos you would want to see made, any questions you have on how to read financial statements, anything like that. Let me know in the comments below. I'm going to be continuing to put these out, and we'll dig deeper into how to analyze this and use it in your business in future videos.